Hello guys. Nice to meet you once again. This is Teacher Polite, and today we are going to be looking at accounting, mainly the income statement and the balance sheet example. Okay, so last time when I came here, we were talking about the format for the income statement and the statement of financial position. So now we want to look at an example. So this is a question that I have here, a question that I took from the past exam paper, just for us to be able to like to cover like the income statement and the statement of financial position. So that is what we want to do in this lesson. Okay, so let's read the question. So firstly, what you have to do, you have to read the question and understand what are the requirements of the question. So in this case, it's so Sele is in the import business. The following balances were extracted from your books on 31 March 2009. So when it comes to accounting, dates are very, very important. So you have to make sure that you take note of the dates. So here they are saying it was on 31 March 2009. So let's see what happened. So you are given the figures for sales and everything else. Sales, returns, outwards, inventory. So what you can do is you can just scan through the figures that you're given so that you will know what are the things that you have. So let's move on to the additional information. So on the additional information, that is also the other part that is very, very important. So we have inventory at 31 March 2009 was valued at 12,600. So this is our closing inventory. The motor vehicle is used to bring purchases. So we have our motor vehicle, and this is used to bring purchases to the business premises. So that's number one. So it is used to bring purchases to the business premises, and then also sell and to deliver goods to customers. So the motor vehicle is used 20% time to collect purchases and then 80% to deliver goods. So automatically that means that the expenses that you have to do with the vehicle are supposed to be divided. Then number three, depreciation is to be charged on the premises at the rate of 2% per annum on cost using the straight line method, and on the motor vehicles at 20% per annum using the reducing balance method. Then number four, the loan interest is outstanding at 31 March 2009. Then insurance 450 was prepaid. Then electricity for lighting 130 was due at 31 March. Then we have the provision for doubtful debts is to be maintained at 2% of trade receivables. Okay, so that is the information that we have. What is the required? We are required to prepare an income statement for Susele for the year ended 31 March 2009. So yeah, that is what we are supposed to do. So let's go to our answer booklet. So we have our Susele income statement for the year ended 31 March 2009. So we know we're supposed to start with the figure for sales. So allow me, I'll just be navigating between the two. So number one, on the sales, we have 95,800. So that is the amount for the sales. So 95,800. We write it in the last column. So that is the amount of the sales. So the next thing that we are going to be doing is let's look at the cost of sales. So because I guess we don't have any returns inwards. Do we have them? So there are no returns inwards yet. So we are just going straight to the cost of sales. So we say less cost of sales. So with our cost of sales, we start with the opening inventory. So your opening inventory, you find it in the trial balance. That's where you find your opening inventory. So let's just go and see. This is the inventory that we have, which is in inventory on the inventory, given the inventory on 1 April 2008. So that is our inventory, which is this amount 10,780. So 10,780. That is our inventory. Then the next thing that we're going to do is we have our open inventory. So say add our purchases. Okay, so purchases, as we have seen, purchases, we have a lot of adjustments that are there that we're supposed to do. So this amount is 48,340. So let's go and write 48 in the first column, 48,340, because we have a lot of adjustments that we want to do. So we have the amount for carriage. So we want to add carriage. So now when it comes to the carriage now, we are supposed to use the information that we were given. So let's just go and see, because we don't have carriage, they are not written yet. So we have to go to that part, which is saying the motor vehicles is used to bring purchases to the business premises of to sell it and to deliver goods to customers. The motor vehicles is used 20% of the time to collect purchases. So 20% of all the expenses that you have to do with motor vehicles is supposed to be under the purchases. So we are going to say we have wages of the motor vehicle driver. So the wages of the motor vehicle driver, which is 11,500, and then we have the motor vehicle expenses even. They are supposed to be there. The motor vehicle expenses. Okay. So let's do that. What else do we have? Then the other one, it has to do with the depreciation. So okay, so we have 11,500, and then we have 6,500. So these are just expenses, so we can just add them and then we calculate 20% of those. So let's just go and say we are going to say 20% times 11,500 plus our 6,500. We close the bracket, and then we are going to say we also want to incorporate depreciation because the vehicles are supposed to be depreciated. So the vehicles, let's go to our additional information. So they said the motor vehicles, number 3. On the motor vehicles, 20% per annum using the diminishing balance method. So with the diminishing balance method, you say cost minus accumulated depreciation, and then you get your answer. So we are going to say here 20% of 20,000 minus 15,000. That is the depreciation, and then we multiply it also by 20%. So okay. So I'm just gonna let this bracket be long enough maybe to get into this also section. So we are going to say 20% of 20,000 minus 15,000. Then on that amount, we are also going to say times 20%, because not the rest of the amount is supposed to go to the motor vehicles, to the purchases, but 20% of the depreciation. So if you say 20%, if you just say 20% of 5,000, because if you say 5,000 is the difference between 20,000 and 15,000. So now we want the 20% of 5,000. It gives you something like 1,000. So now we want the 20% of 1,000, which is something like 200. So it means that, so I'll just put it in red so that maybe you guys will understand. So it here is 200. Then we want the 20% of 11.5. So if we say 11,500, then we say plus 6,500. We are going to get 18,000. So we want 20% of 18,000, which is 3,600. So this part will give you 3,600. So if we add the two, it's going to give us an amount of 3,800. I hope here we are clear. And unfortunately, I'm sorry, I don't have a calculator to put here, but basically that is what you are supposed to do. Okay. So now we have our figure then for the carriages. Now let's move on. After the carriages, we also have returns. They are returns outwards. We returned goods to our suppliers. So we also have to incorporate that. So what you can do, like for me, usually I would want to add here. So let's add, if we say these plus, we're going to get this is 1, and then this is going to be 2, carry 1. So 52, 52,140. And then we're going to say less returns outwards. So if we subtract our returns outwards, let's go and see. Returns outwards are 960. So we're going to say minus 960 so that we can get our amount that we're supposed to put there. So if we subtract, we get a 0. 14 minus 6, that's 8. And if you say 11 minus 10, that's going to be 1. And then if you say this 1, so we have 51,180. That is our answer there, 51,180. So now we are supposed to edit with the amount on top for the inventory. So if we add the 2, we're going to get a 0, a 6, and then a 9, and then we're going to get what? This is 1, and then 6. So 61,960. That is the answer that we have there. So now we have to say less closing inventory. So the closing inventory, we get it in our additional information. So let's just go and see. So our closing inventory is this one, which is 12,600. So let's put 12,600. So now we have 12,600, and then the total, we're going to put it here and say if we subtract the 2. So I'm not putting brackets since I'm using the words less. If I wasn't putting less, I was just gonna put the figures in brackets. But since I'm putting less, then I don't need to do that. Then this is 3. 11 minus 2, that's 9. 6 minus 2, that's 4. So we have 49, 360. And then if we say 49, so this amount is what we refer to as like our cost of sales. This amount that we have here, this is the cost of sales. So now we are subtracting from that one. This is 4, this is 4, and then 15 minus 1, that's 6, and then that's 4. So our gross profit here is 46,440. So that's our gross. That's our gross profit. Okay. So I hope we are still together here. Then let's move on. Now we want to check if there are any other types of incomes. So we are going to put here and say add other income so that we can just find out what is our gross income. So on the other incomes, you're looking at things like maybe if you have anything like, let's say, discount received. So discount received is also like a part of your other income. So let's just go and check if we have discount received. Any discount received yet? Yes, we do have discount received. So if here we have discount received, what is the amount for discount received? Is it this one? So our discount received that we have there, if you look at it, it's 5,300. So 5,300 discount received. 5,300. I'm just writing in the second column. Is there anything else? So before you can proceed, you can just check with the provision for bad debts to see if there was an increase or a decrease. Because if there has been an increase, what it means is that it's an expense. But if it's a decrease, then it means that it's an income. So the provision for doubtful debts was 560. So let's see what happened here. They said number 7, the provision for doubtful debts is to be maintained at 2% of trade receivables. So it's 2% of trade receivables. So let's just go to our trade receivables and see. So our trade receivables amount is actually this amount, which is 8,500. So if we're going to say 2% of 18,500, so we are just going to get this amount, which is 2 times 5, that's 10, 0, carry 1, 2 times 8, 16, plus 1, 17, 7, carry 1, then 2 times 1, that's 2, plus 1, so you have 370. So now we have to compare 370 and 560. You can see that there has been a decrease there. And the decrease is of how much? Let's go and say decrease in provision for doubtful debts. So we are going to say decrease in provision for doubtful debts. So I'll just put it in brackets here. No worries, I'm gonna write it on the second column. So it's going to be 560 minus 370. We got 370 when we calculated. So the difference there will get something like 190. So the difference is 190. So now we are supposed to add the 2. So if we add 0, 9, 4, and then so it's 5,490, and then if we add with this one, we're going to get 0. 4 plus 9, that is 13. 3 carry 1, we have 9, we have 11 carry 1, that's 51, 930. So this is our gross income. That's our gross income. So what's next? We're going to say less total expenses. So let's calculate and find out how much are our expenses. So in terms of the expenses, let's just quickly check. Okay. Okay, so now we are continuing with our expenses, less total expenses. So on the expenses, let's see. We wanted to start from here to say wages. So we have wages of a motor vehicle driver. Remember these ones, we said 20% was for purchases and then the other one was for delivery. So the 80% is the one that we are dealing with now. So we just go and say wages of motor vehicle driver, 11,500. So wages for motor vehicle driver. So say 80%. So this is 80% times 11,500. So we want 80% of 11,500. So we simply calculate to find out what is 11%. I'm using a separate calculator. So 0.8 minus 11,500. So we get something like 9,200. So we write our 9,200. Then motor vehicle drivers, it's supposed to be wages. No? So wages. Okay. Then the next expense that we have, it is the motor vehicle running expenses. So motor vehicle running expenses. Okay. So let me grab this one off and say this one motor vehicle driver. So this one is driver. I have to make it clear so that 80%. Okay, that's fine. So now the motor vehicle running expenses, they are said to be what? 6,500. So again, we want 80% of. So allow me to write it in here. 80% of 6,500. So if we calculate that 80%, 0.8 times 6,500, it gives you 5,200. So there we are. Then the next expense has to do with okay, depreciation, right? So we have rent and insurance, which is 7,700. So rent and insurance, let's just check if we don't have any. So we have insurance 450 was prepaid. So we have insurance that was prepaid 450. So we subtract like prepayments. So we are going to say rent and insurance. So it was 7,700. Then we'll say minus 450, the prepayment. So we are going to get something like what? Let's say it's 500. So it's going to be 7,250. Then the next one is light and heat. So let's just check the light and heat. If we don't have any. So we have electricity for lighting 130 was due. So if it was due, it means we have to add it. So 130 for light and heat, 4,950. 4,950. But then we had is it 130? We had 130, which was outstanding on number 6 minus 130 plus 130, I'm sorry, plus 130. So we add that one is going to give us, this is 8, this is 0, then this is, so 5,080. Then the next expense that we have is general and marketing expenses, 6,200. So 6,200 general and marketing expenses. So we have general and marketing expenses. Since I guess we didn't have any adjustments, so that's fine. Then let's move on to the next one, which is okay, not discount received. So the last one that we would want to write is the depreciation. So let's have depreciation. So our depreciation, we want for motor vehicles first. So remember, for motor vehicles, it is supposed to be splitted between the purchases and the distribution. So we say 20,000 minus 15,000 times 20% because they're depreciated at 20%. Then for the for the expense, it's going to be 80%. So let's do that. We're going to say so I'll just say 20 over 100 times 20,000 minus 15,000. Then we say everything multiplied by, we multiply it by 80%. So that is what we are doing there. Okay. So what is the answer that we are going to get if we say 20% of 5,000 first? We get 1,000. So 80% of 1,000, that's 800. So I can write it in the first column. And then we want the depreciation for the next one, which is the depreciation for premises. So it's 2% per annum depreciation of premises using the straight line method. So premises are worth 60,000. So just say premises so say 2% times 60,000. So if we do that, we are going to get what? If it's 2%. So you get 1,200. So the total for depreciation here is going to be 2,000. So now we are going to, I think those are all the expenses that we have there. So we are supposed to add everything so that, okay, I think I forgot something. A second. I saw something to do with the loan. Sorry for that. So let's check the loan. So we have loan interest that was outstanding. So we have a loan. I was forgetting the loan interest. So let's see, did they say anything about the loan? So we have a 8% bank loan repayable. So 8% is for the interest, 30,000. So we are going to say loan interest. So it's 8% of 30,000. So if we calculate the 8%, then okay, 30,000. So it will give you something like 2,400. So we also have to take note of the date, 30 June. And what did they say about the loan interest? 31 March. Okay, so I guess it's 2,400. So if it's like this, then I think that's it. So now we have to add everything. So I'm just going to use my calculator here. So 2,400 plus 2,000 plus 6,200 plus 5,080 plus 7,250 plus 5,200 plus 9,200. So we'll get something like 37,330. So if we say this amount that we got, we subtract it from 51,930, we get 14,600. So this is our net profit. Yeah, so generally that's it, guys. That is what we have. That's our income statement. So yeah, there it is, income statement, well done and finished. So let's just put a double line so that we are done. Yeah. So I encourage you to like my video, subscribe so that we can continue to give you more content. So the next time we are going to do the balance sheet or the statement of financial position for this one. Thank you. Don't forget to subscribe.